So first things first, right? I want to start a quick little, not really even a lesson, just let y'all know if you have, for now anyway, under $25,000 in an account, open up a cash account. Okay, open up a cash account. Here's why. A cash account will let you make unlimited day trades as long as you have the settled funds in your account. Okay. And by settled, that means money you haven't used. So let's say you have $2,000 in a cash account and you've traded with $1,000. That means you have $1,000 more left to use because you haven't used it yet. All right. Unsettled funds are funds that you've used that day. It takes 24 hours for those funds to settle. Basically, the next day they'll become available again to trade with that money as well. Then you can make more day trades. There are no day trade restrictions as long as you have the funds to trade that are settled. Okay. Margin accounts, you have to have $25,000 or more for now to day trade unlimited. The issue with most margin accounts is one, you can only day trade 3 times within a 5 day period. So if on Monday you do one day trade, you got to wait until next week to get that day trade back. All right. So you literally can only day trade 3 times in a 5 day period. Therefore, if you're swing trading on a margin count, you're fine, right? But when you want to day trade or want to, oh shit, get back in the trade and you need another day trade to do so, margin accounts are not your friend, right? Cash accounts are. Now, the reason people use margin accounts is like using borrowed money. So, say if I have $5,000 in a margin account, they'll match that, and now I could trade with a value of $10,000. You see, it's like using account where you're able to use borrowed money based on the money you have in there. But there's so many restrictions on margin accounts. One of those being the amount of day trades, right? 3 and a 5 day period. If you get marked or flagged as a pattern day trader, they can freeze your accounts from trading. If I'm correct, and fact check me, you can only basically close trades and withdraw money. You can't trade on those accounts anymore for like a probationary period that they give you. So you definitely don't want to get flagged as a pattern day trader. Okay. Now it takes a couple flags before they start, shutting your shit down. You get one flag, they might give you another chance. There's also a reset button you can use once, I guess, for the year or forever to reset that little flag you got and you're boom, back to day trading, right? But again, there's just so many restrictions. Not to mention, and I'm going to explain what happened on Friday. It has to do with margin and leverage. Because if you're losing too much money, or if your trades are going bad too much, you'll get what's called a margin call, and they'll liquidate your trades without asking you. Meaning, if you have an open position and you're losing too much money and you're deemed kind of unsafe in your trading, like it's looking shaky, they will sell your positions without you knowing and make sure they get their money back before you lose any more. So margin accounts, you got to know what you're doing, right? You got to be able to handle the issues and navigate those restrictions in margin accounts. So again, if you have under $25,000, do yourself a favor for now and open up a cash account and use that. Now, understand if you have money in a margin account right now, in order to transfer that money to a cash account, you have to close those trades. Well, again, I'm speaking from my platform. Other platforms have different rules. Look into those rules. But a lot of times you have to close your trades and just transfer the money over to your cash account once opened. Then you can trade. Might take anywhere from 1 to 10 days. So it might be a hassle to switch over to a cash account. And you might say, hey, I don't want to do that. It's too much of a hassle. I have open trades I want to stay in. Cool. Double check. They might let you send all of those assets over to the cash account. If not, you could keep the margin account. Just understand what happens when you have a margin account, right? Again, no more than 3 day trades in a 5 day period. All right. So you got to be very precise with your day trades. Secondly, if you're losing too much money, they will sell your shit to make sure they're not losing the portion they're letting you borrow. Okay. And if you do get flagged for trading more times than you're allowed to as far as day trades go, Your account can get frozen and suspended for a certain amount of time where you're only allowed to trade or close positions, right? And I think withdraw money. So again, that's what you're dealing with. So I want to kind of go over that for some of you who might not have a cash account or don't have a county yet and want to get an account. Cash account is your best friend, right? Because it's all on you if you have under $25,000 in an account. All right. Cool. Now let's get into this. So Friday. All right, Friday. The market took a hell of a dip. But again, we're not worried about that. We're not scared. That's actually kind of what we were waiting on, right? You want that dip. The market was basically going hella high. It kept running and running and running, right? And so it was a matter of time before it came down. Good thing is we ideally either started that drop and it can continue, or we had that drop and it's done. But either way it goes, once this reversal happens, the big drop we needed, that little break, that little deep breath the market needed to take, is ideally out of the way. Okay. At the same time, it's all because of a tweet, right, Donald Trump made about putting 100% tariffs on China over rare earth metal wars. Now, we talked about this. We've talked about this multiple Sundays and in the chat. We already said rare earth metals are going to be the way to go. We even have a list of stocks that we should have already invested in or looked at in regards to rare earth metals, and I'll go over those again. But what I want you to focus on is we heavily always, in this Discord anyway, go back to the past to determine the future, right? And if we go back to the past to determine the future, where are we at? Oh, I'm already here. We can go into SPY right now, right? And again, I'm not using TradingView on this iPad. I'm using Webull for the sake of this. It's a little smoother on this iPad. Still getting used to using it like this though, so bear with me. Here we go one day. All right, so the past, right? We've been here before, exact same place. Trump talking about tariffs, Trump talking about tariffs on China, Trump basically pump faking because at the end of the day, what he wants is a deal to be made. And the moment China shows any type of leniency or leaning into what Trump wants, he's good to go. Oh, we're best friends now. Z loves me. Tariffs are off, right? Here's what happened the first time, right? April, that big ass dip where the market basically fell one, two, three, about 3 days and started recovering from there. And the market's been going up from 479 all the way to 673, basically 674, right? It's been running ever since. Okay. This was one of the biggest crashes that, it's had. And from there, it's a V-shaped recovery. What I want you to understand is we're basically there again. Tariffs on China, Trump looking for a deal and to get what he wants. Okay. There was even another time before that when we stopped caring about tariffs in general, where he mentioned tariffs, the market kind of dropped a little bit that day, but not even much. Next day started running again. It was one of these dips over here where, all right, we're over the tariff stuff. Here we are again, right? My bad. Another big drop off of tariffs. This one was big. This one was highly exaggerated. So in terms of the past, right, here we go with the same scenario. So what are we looking for? A possible continuation in the downside can happen. It can happen. But what we do know is once we get an actual recovery, we're on our way to 700 for SPY, right? And remember, people say SPY moves the market. It's the market that moves SPY. SPY is the ETF that holds the top 500 stocks. So for SPY to go up, those stocks have to go up. You see what I'm saying? So if SPY is making it to 700, that means you got your NVIDIAs, you got your Googles, you got your Amazons, you got your Apples, and all of them also moving up as well, also making all-time highs again for SPY to get above 700. But once SPY is done with whatever downtrend this tariff news causes, that turnaround reversal will take us above 700 for SPY. Okay. Now I was clocking SPY making it to 700 before the year's end. Now I can't so much because this random, event happened, knocking the market down, might take a little bit to get back up there above 7. But we're not worried about that. We're looking for value stocks, strong companies, great financials, growth stocks with the real use case that we can invest into, right? As the market starts to go back up, or even in this downtrend, we take small positions and DCA on the way down, which is dollar cost averaging, which is why I say if you're trying to catch a good discount while the market is coming down, right, you don't go full position, maybe 25%. It gives you 75% of your funds left to use that you want to allocate to that position as it drops lower. Okay, that's why we don't go full on the first drop. We just make a start if we think this is where we want to get in, it's falling enough. If it falls again, we wait for it to try to find that bottom, then we enter with more capital. Okay. And again, same with reverse. Boom, you got in with 25%. Oh, it's going up, it's leaving us. Cool. Look at your previous levels. Once it starts getting to those previous levels that it hit and coming above those levels, you can actually buy into it to the upside. Okay. But again, a little at a time. So either way works, but never go full position your first move. Now, let's talk about this reversal possibly happening already. So JD Vance basically came out and said, hey, Trump, just kidding. He kind of means it, not really. He just needed some negotiation room to try to get you to do what he wants. Cool. So you see these tweets from him saying, we're kind of pump faking. We just had to use that as a negotiation tactic. And you also see Trump saying, hey, China's still my friend. I still want to help him. We don't want to ruin them, so I'm sure he'll make a deal. Let's see what happens. On top of that, you have Trump flying over to Israel, I believe it's Israel, one of those places, to continue the peace talks with Hamas and all of that stuff. So again, you have all these now, literally a couple of days later, good things happening, these tweets coming out that could bring the market back up. And now if we look at the market, a lot of these stocks are moving back up already. Okay, you got SPY already up $8 overnight. We closed at 653 on Friday for SPY. Okay, and we're already at 661. Now, if we open up bullish on Monday, market's taking off, right? SPY ideally has to get back above 674 or get above 674 to show us, a we're continuing to that upside. Okay, I'm not saying wait for that if you want to day trade it, right? I'm just saying this could be that reversal, but we need to see what Monday brings. Okay, this is all overnight stuff. And what you have to understand about the overnight, that's people buying it up with low volume. Those are big people just buying all these stocks, trying to get in fast, also institutions, but with low volume. So we can very well open up on Monday, market opens, real volume hits, because now we have millions of traders coming into the market, starting their positions. They might be trying to continue the short on the way down. They can sell off, right? So still tread lightly, still pay attention to the market and how it's moving, and understand this is definitely what we were looking for. All right. This isn't a bad thing. This is where we get rich. All right. If we can, and we're not going to time the dip perfectly, right? It can go up from here. We didn't time the dip at all. It can go here and drop some more. We didn't time the dip at all. But if we get a piece of this dip and this market can return and go back to the upside and above, that's how you get rich. Okay. You want to catch it at the bottom. So don't let this current downtrend leave you, right? Get some of that. But again, right, be smart about how you do it. But yeah, so like I said, basically JD Vance came on, called a pump fake slightly, and Trump's basically, saying all these, we're going to come to a decision type tweets about China. So that's why the market's probably kind of going up now overnight, because everybody's trying to buy on the possibility of a positive Monday. Now, before we get into trading this positive Monday, let's see how the week's about to go. So for Monday, right? Columbus Day holiday, cool. Philadelphia Fed President Ann Paulson speaks. So we got a Fed president speaking. That's always something to kind of be mindful of, but I don't see Monday doing anything outside of what Monday's supposed to do. So you need to watch and trade that trend. Okay. Tuesday, again, more Fed speakers and things like that. Tuesday, trade the trend, trade what you see, only perfect entries and exits. Wednesday, Same thing, a bunch of Fed governors speaking throughout the day, throughout the majority of the first half of the day anyway. That Fed beige book right here is important. Pay attention. So you could catch some choppiness or sideways movement until 2 p.m. when that Fed beige book comes out. Tuesday, my bad, Thursday, you see all of this right here. This is where you need to be careful. This is where you need to be careful. If you are day trading on Monday, Tuesday, Wednesday, and the day trades are working out, take some money. Take some money. Pay yourself, right? If you make a good ass trade and you doubled what you had, take out at least half of that. That's what you paid to get in the trade. Then you can let the rest ride if you want to. But understand, Monday, Tuesday, Wednesday can all be put in jeopardy come Thursday. So you might want to pay yourself. Now, if you're going to swing trade on any of these days, that's fine. Give yourself time, okay? This market is still choppy, so if you're going to hold trades, no more weeklies. No more weeklies. If you're day trading, fine, do it weekly. If you plan on possibly swinging that trade, give yourself time on these options. All right, that means 30 days or more. All right. But again, Thursday, please be careful. You got all this economic data, Fed speakers, PPI, core PPI, CPI coming out from morning to late afternoon. Okay, and understand we need a good core PPI, right, to give us a good decision for the next rate cut. So if we get a bad PPI, core PPI report, or a bad CPI report, shall I say, 'cause that's how they're going to say it, right? Understand that people are going to start getting shaky all over again and getting emotional about a bad CPI report. You could definitely see a sell-off on Thursday. So pay attention to that report. That report comes out at 8:30. That's an hour before the market opens. So what does that tell us? We're going to see the market reaction before the market even opens. So pay attention. Wake up a little early. If that trend continues into market open, then we know that trend is solidified. So let's say it's bad CPI, pre-market stuff starting to fall, market open stuff still falling, ride that trend to the downside, puts and shorts, or stay out of those bullish trades until you see a turnaround, until you see some type of base and a reversal. And we all been through the training to know how to find reversals, all right? You got to be, don't just go guessing, oh, it's running, let me hop in, or it's coming down, it might turn around. You have to be as sure as you can. Now, nothing's perfect, right? But give yourself indicators to utilize, give yourself rules to follow, right? Give yourself chart patterns to trade specifically to determine if you want to get in a trade or not. But again, Thursday, watch that CPI. It comes out at 8:30 in the morning Eastern time. So we're going to see the reaction pre-market. And we're going to follow that trend into market possibly, but that's when you decide which direction to go. Fridays, again, I'm going to say this every time. I don't trade Fridays too much. I don't make too many calls on Friday. Actually, I forgot last Friday was actually Friday, which is the reason I was even making calls in the chat. And clearly they didn't work out. But yeah, so Fridays, I don't really make too many calls. I might hop in the chat and bullshit with y'all. But ultimately on Friday, I'm selling positions and taking my money, waiting for next week to do what it does. So I just, again, be cautious every Friday because ideally that will either change or confirm the trend. And there's rules to Mondays if Fridays don't revisit previous tops. It's a whole nother story. All right, fear and greed meter. We talked about this, right? We're at 29. There's 0, there's 29. We already said when we're anywhere in this fear and extreme fear zone, start looking to buy. All right, now you could chill here, but if we fall anywhere in here, or even while we're right here, this close to the extreme fear, this is where we buy. This is where, yes, the market is coming down, the market is selling off, but that means the market is providing opportunities for those good companies or growth companies that haven't had their chance yet. Okay. And now let's be honest, right? There aren't too many coincidences in the stock market. So we have this big crash that happened on Friday. Okay. What's coming up? Earnings season. Next week starts earnings season. So all these companies that are about to beat earnings and blow stuff out of the water that these institutions and inside traders already know what they're going to do, they ideally needed a better entry. They ideally needed to buy these stocks lower before they blow up higher. Um, that's a possibility of one reason, right? One reason the stock market came down. Because again, Trump's talked about tariffs on China and Asian countries and stuff before, right? And not that first time in April, I'm talking about after that. Market didn't react that crazy. Now out of nowhere, we're talking about tariffs yet again, which we're already over this type of news because we know what happens anyway. And the market makes that type of reaction to news we haven't made that reaction to in a while that we're already numb to. There's more stuff that you can't see going on behind the scenes. So you have earnings season and you have a whole bunch of these other contracts and companies, right? About to get into bed with a whole bunch of these mega names like XAI, OpenAI, all these other companies, right? That are trying to buy up other stocks or other companies and energy and things like that. So there's a strong chance that the big benefiters from these things are trying to reposition themselves lower for this stock to rally again due to the stuff they're going to be doing in the first place. Okay, so again, don't ever get scared of stuff like this. Just try not to over leverage. All right, get greedy when you see that fear. I also want to talk about margin, right? Remember how I said margin accounts will start selling your stocks if you're losing too much? Part of that drop wasn't just people selling on their own. People had stop losses that triggered throughout that day. It fell so hard it triggered stop losses. It triggered some of my stop losses. On top of that, margin, right? Liquidation came from margin. People basically the margin doing margin calls. They saw you were dumping. They already have presets to start selling your assets to make sure they're protecting their own assets. So that also causes the market to drop. So that causes the market to drop. Stop losses getting triggered on the way down causes the market to drop. Okay. Plus people selling, causing the market to drop. So understand what's going on. Let's move into crypto real quick while we're here. Bitcoin, pay attention to that 116 level. If we can get above that $116,000 level and kind of stay above it, play above it, and keep moving, I guarantee you a lot of shorts are going to have to cover. What that means is when you short a stock, you're also betting on the stock to go down. Okay. You're basically borrowing shares to purchase them at a lower price, but sell at a higher price because the stock is falling. So you keep that difference, right? That being said, if that stock goes or if the movement of the stock goes against you and you're a short, and instead of it dropping, it goes up past a certain level that you entered at, you have to start buying the stock. They have to actually purchase the stock to prevent themselves from losing more money. Okay. And with shorting, you can lose an infinite amount of money. As long as the stock keeps going up, you're going to lose money on that movement, right? Excuse me. So that being said, excuse me, anytime that you see a bunch of shorts in a stock, in a market, or in crypto, if it hits a certain level where the shorts came in heavy and it gets above that, you're going to see what's called a short squeeze. That is a short squeeze where shorts now have to cover and purchase these stocks. And what happens when you purchase these stocks? Buying stocks makes it go higher. So now you have billions of dollars of shorts or millions of dollars of shorts that they have to now buy that stock back. So you're going to see millions flow back into that stock. Therefore, that's what causes the stock to shoot back up. So if you can find and use these levels on stocks, see where a bunch of shorts came in and started shorting the stock, just know once we get back above those levels, shorts are going to have to cover, purchase the stock, and now the stock's going to move up at an exaggerated level. And that's what's going to happen with Bitcoin. Above that 116, 117, you're probably going to start seeing it go back up unless shorts continue to double down. But any type of strength in that momentum will kill them. So, but yeah, that's a short squeeze, and that's what I'm looking at with Bitcoin. But that's also what you can look at with SPY, right? People started looking, oh, SPY's coming down. I'm gonna hold these SPY puts over the weekend, and you see SPY turning around. I'm gonna hold these SPXs, right? I'm gonna hold all these puts on these other stocks, and you see stocks turning around. Once they start hitting those levels where the shorts started feeling real comfortable and buying a lot of puts or shorting the stock heavy at that level, you're gonna also see the stock market rally too if it can get above those short levels. Now I haven't looked to see where those levels were, but again, you'll know if the stock starts rocking out of nowhere. All right, now let's get into this Weeble right here. All right. So we've already taken a look at SPY. Let's drop down a little bit just to see where we're at. SPY currently. recovering. This is the overnight market right here. Okay. Overnight market SPY from the after hours market is 652 to 661. It's also above that 200 on the 5 minute. What I want to look at is this 30 minute and the 4 minute, right? If I'm looking at what could happen tomorrow or what can continue, I want to go to the 30 minute or the 4 hour chart, right? If I'm gonna zoom in and look at that type of data. So 663. Yeah. So the margin of difference here on the 30 minute is I like to see the stock get up back above the 200. The thing is that 200 is 668, right? Above 668, SPY can retest that 673.95 high already if it gets that far. That 50 EMA is a good start on SPY. So above 662.53 as of right now, above 662.53. If SPY gets above that and can hold above that and is even higher into the markets open, we're looking at SPY testing that 668 level right there. Okay. Above that 668 level, we're looking at a retest of 673.95 highs. I'll mark it out. That way you could basically see. Where's the, it doesn't have the line I like to use, but oh well. Horizontal line, all right. So first one, boom. Easy. Second one, boom. Then we're looking to get above here to basically say bye-bye to that high and beat it. Now, that's cool because when we zoom out on the daily, we see our lines. When we zoom into day trade the stock, we now know where we have to go to, right? You see that stock start moving here, knocking at that door, you know above 662, you're going to enter calls and look for 668. Now, you don't have to wait till 668. Once you're in on 662 and it's moving higher than that, right? Let's say you get to 663, that's a full dollar's move. For those of us who don't have the money to be losing, raise those stop losses. I'd rather you make a 30-cent win instead of a dollar loss. So we get in on our entry, we start moving above our entry, raise your stop losses. That way, no matter what is green, okay? But above 662.52, we're looking at 663, around 664, above 663, right? Remember, a lot of those times, it likes those solid numbers, the 65s, the 60s, right? The 10s, the 5s, the 15s, all of that. So again, above 662.52, and if we get hit that 63 area, we're looking for 65. That is our modest price target one. Above that, then we can hit our 668 target. That'll be our modest, right? Price target two. Above that, this could be a reach for one day, right? It might take a couple of days or might not even go before coming back down. Then we're looking for the 673.38s and all-time highs again. It'll be a glorious day if this market just starts running like nothing ever happened. But just to be safe, right, we have our modest 662.52. That'll be our entry, right, for 663, 665. Above that, then we'll see this price target of 668, and then we'll make our way to 673 possibly. This is being recorded, of course. I'll put it in the chat. Takes a little bit, though, so it might come out like an hour after I'm done. I'm working on a small iPad, so give me some grace. But now let's get into some of these other stocks. So Big Bear AI, right? Despite Friday's come down, right? Despite the crash on Friday, you need to pay attention to Big Bear AI. I told you I'm looking for this stock to go to $10 plus. Okay. I'm looking for this because, again, this is always being compared to Palantir, but understand it's not a Palantir, right? Big Bear AI is a different kind of defense tech, right? Scanning, TSA type stuff, identity recognition and stuff like that. I'm gonna tell you right now, the way that the US is going, the way the world is going, and the way they're trying to make a digital dollar and and I'm not being a conspiracy theorist, right? UK is already trying to do it where you have basically a digital ID that you use, right? Scanning technology is going to be very big and very important, right? Scanning tech defense is going to be even more important. And that's where you can see BBAI reach some great numbers in the future. Okay. Right now, short term, I see it going to $10. Long term, this is easily a $20 plus stock because of the use case of the stock. Now, a couple headwinds is it has contracts, right? BBAI is winning contracts. It has contracts. The issue is its structure is still not fully there. BBAI is the equivalent of me and maybe 30 of you guys starting a company to buy government contracts and basically try to fulfill those on our own, like outsourcing to other companies and things like that, right? That's BBAI, but I'm gonna give them a little more credit. They're slightly above that, right? But they're that company where they need just a little more structure within their business to basically perform and put out at the level they need to put out for these companies and these contracts that they're actually winning. So it's going to take some time. That's also why these are multi-year contracts, and these contracts also have like a structural agreement where you're not getting paid everything until you perform. All right, so they see something in BBAI, they're trying to use and implement BBAI, but BBAI needs to put themselves in a better position. So this is what you call speculative growth, right? We're taking a chance on a company with a great use case, but it still needs to improve its company structure. Okay, so short term though, right? BBAI I think is an affordable stock. The moves minus Friday aren't really too crazy, right? This was a short squeeze. This is what I was talking about, where shorts they shorted it and they had to cover type stuff. But once we got above that, it started running. But if as you look right here from the bottom, 713 to 756. When it dropped from 741 to 712. Right, these moves aren't crazy. This was a drop. It got to 771, came down to 710. It's still within that $7 range. It's not like it's dropping a whole $2, $3. So these are safe, affordable growth stocks where, yes, you can see a loss, but you can monitor the movement a lot easier than a stock that you wake up and is down $5, or you're watching the stock and it just shoots up $20, things like that. You can manage these. You just got to make sure your position isn't too heavy unless you can afford to, risk that type of capital, or unless you can handle the up and down volatility, because BBI is kind of volatile, where as you see it hit 777 and drop right back to $7 basically. All right. Friday 880 dropped all the way down to probably $6 or something. Yeah, 674. But again, put BBAI on your radar, even take a small position, but do your research, of course. All right, contracts are there, use cases there, but again, company structure needs to grow a little bit. But they're not going to, the government, right, and these big names aren't going to give them contracts and not help them, right, to provide what they're looking for. Just know that. Now BBI, understand, I'm not looking for, day trade this. We'll go over that tomorrow if I'm on it and I see a day trade there. This is more of a trade to start building your portfolios in the direction that the stock market and our future is going. Okay. So this is more something for your portfolio. The way Friday happened, if we don't drop any further from here, that's not a bad starter entry. Let's go MP, right? I told you guys about MP. Bro, a couple weeks ago, I believe we talked about getting into MP because of rare earth metals, right? We talked about this. Rare earth metals was already going to be a thing that we had to focus on. With rare earth metals, and even before I brought it up, right? Zinxis, and they brought it up further back. So again, multiple times we needed to be in MP for this exact position, for exactly what happened on Friday. And if you look, somebody actually knew something. Somebody knew something before we did. All right, because the same thing happened last time when the US first mentioned trying to move away from China and their rare earth metals. That way we can basically build our own infrastructure to provide our own rare earth metals, right? That caused MP to go up. So somebody knew something before that 11:15 tweet or 11 o'clock tweet, 11:30 tweet came. Somebody knew something because this stock started moving at 10:35, 10:40, and it went from $75 and made its way to 84.88. And that should tell you that as long as we're trying to move away from China's rare earth metals, right? MP Materials is going to be one of the biggest players the US has. So I guarantee you, and again, this is not financial advice. Do your research, fact check me. I'm not always right. But if you ask me, right, MP Materials is $100+ stock. Okay. The thing you need to do is buy it at the best position you can. right? Anything can happen. The reason MP didn't take a crazy dive on Friday is because MP is basically the hero to that China tariff story. If we start actually moving away from China's rare earth metals completely and pull tariffs, and China starts to pull their shipment of rare earth metals that we're still taking, MP is going to have to be utilized a lot. We're going to have to beef them up. We're going to have to put more money into the infrastructure. We're going to have to make sure they have facilities and personnel and tools and things to basically mine all the metals we need and get us these metals. And understand, these rare earth metals are no joke. They're just as big as the energy that we're going to need for this AI revolution, because these rare earth metals go into our missiles, our submarines, our ships, our defense, our chips, all of that. So if China actually does pull their rare earth metals that we are still getting from them, and by that I mean China actually is telling Taiwan Semiconductor, telling Taiwan that they can't even sell us chips or certain chips anymore because of the rare earth metals that are inside of those. It can get that bad. We're going to need our own homegrown companies to go ahead and double time that resource for us. So you need to be watching MP materials. Okay. Now this is easy. We're already super high overnight. So if you do want to day trade, MP materials over Friday's high, 84, 88, can take us to 85, 87, and $90 from there. Okay, that'll be the day trade. If this holds and we start to blast above the high of Friday, right? Let me make sure. I gotta see if we have any. Has it been higher? Gotta go back. Zoom out. Let's go to the monthly. No, so this is the highest MP materials has been. And what do I say about new highs? If there are no previous highs, we go dollar for dollar, okay? Dollar for dollar. So that lets me know. We're going to drop right back down here so we can get this shit right. If we get above 84, 88, we're looking at 85, 86, 87, and so on. That's how we're watching it, okay? Because we don't have any previous levels to go off of. So you go dollar for dollar, okay? That's for a day trade. Understand that these highs, if MP material stays at these highs come market open, you also might have some sellers. You also might have some people ready to take profits. The ones who got in down here while we skyrocketed their pockets, excuse me, if they didn't sell their shares here, they might be waiting for it to go a little higher and they might sell on you there. So just be careful. Don't just assume your trade is safe. But the closest thing to an entry I would take is above 84, 88, right? Looking for 85, 86, 87, and so on. So we'll mark this out as this will be our entry for a day trade tomorrow. All right. Now remember, right? Pre-market matters. If it's staying around here, pre-market even comes down a little bit in pre-market. Remember, use the pre-market high. All right, use the pre-market high. So if pre-market opens somewhere over here and it drops a little bit, right, from pre-market, just understand whatever the high that pre-market is, you can use that as an entry and try to retest Friday's high. And then if it goes above that, you stay in for another dollar or more. Okay. I hope that's not confusing you. But basically, if you go in tomorrow without a plan, oftentimes I tell you, if you don't have a plan, you just wake up, or you didn't get to map it out like you wanted to, utilize the pre-market high. Okay. If market open is lower than pre-market high, your breakout entry will be that break above the pre-market high. Okay. But yeah, for now, though, I don't know what pre-market is going to do. So this will be our entry above Friday's high to go a little bit higher by a dollar or two. But long-term MP materials are going to $100. I just say your best bet is either ride the wave or wait for a pull down, because I always like to buy stocks lower anyway. If I buy a stock on a breakout, ideally I'm just day trading it and I might swing it if it stays high and looks promising. But I try to put us in position while stocks are still low. Back to this 30-minute. I want to see how the MACDs are looking. Yeah. It's playing around here. So yeah, just be cautious. But yeah, MP materials on your radar, long term over $100, probably even short term, honestly. So, but that is your day trade level right there. If it does dump, let it dump. and buy it lower. But I guarantee you, if it does dump and come lower, you're getting a discount for a stock that's going to be over $100. USAR. I also put USAR on our watch list, right? Told you guys to watch USAR, and it is up. Again, that is another rare earth play. All right, that is another rare earth play. We saw this coming before a lot of people already saw it coming. So ideally, when I brought it up, we should have already been in pretty low. All right, but it's all good. This is another stock that will benefit off of this rare earth metal war that we're currently having. And even after the dust settles, right, America understands we need to rely more on our own rare earth metal production. Okay, that means the mining of these, the processing, the pipelines, the transport, all of that, right? So of course, let's look for the pick and shovel plays. But again, companies like USAR, right, that are catching, looks from the government, that are getting contracts and stuff, that are in conversation of receiving a contract. Things like this can also solidify that contract that they're basically currently in talks over. Let me see, nighttime market, $37. It's up 4 or 5. It's up $4.39 from Friday's close. So it's basically recovered. And again, like I said, these rare earth metal plays, the MPs, USARs, they were actually the winners of Friday's drop down because of the news that came out. Means these companies need to come into play. So you ain't got to look at USARs and MPs. You need to dig and do your research and look for other companies that could benefit as well. Now you can find list of these companies on ChatGPT if you use the right prompts to ask, or Google in general, right? Rare earth. What are some other rare earth companies that are in talks for contracts with the government? Things like that, right? And you can pull your own list of these and do your research, because your best bet is to get in companies before they get discovered anyway. Get in them low. When you start looking at these companies after they're already running, you're looking at breakout plays. And if you're holding those beyond day trades, it gets a little dangerous. You got to be able to withstand that drop down and understand that if this is a good company, right, you're going to DCA. You're not going to get scared. You're going to DCA. But yeah, USAR, right, on your radar. That's another one that if there's still rumors of rare earth wars, or Trump or the government says anything about needing to utilize our own resources, you want to catch these, possibly, get bullish off of those type of comments and that type of news. That being said, you see that 3880 that happened after hours, right? That 3880 that happens after hours. There's a strong chance, not always, but a strong chance that the stock will retest or revisit that 3880 right there. Because what this was is a whale came in during after hours and made a humongous purchase in USAR, and that spiked it up, right? That spiked it up to 3880. What brought it back down is there were shorts waiting, orders waiting, things like that. Sellers, people who are already in that saw that, sold it right away. And it basically came back down here. But somebody bought big on basically the idea that it's probably going to go up some more. So there is a chance that USAR at some point can retest that 3880. So let that be a level that you're looking for, right? Let's say you get on a day trade, we're above that 3794. You can hit that 3880 from there. These are little tricks you need to know. When you see stuff happening after hours or at the end of the market, a crazy spike, right? A crazy spike happens at the end of the market. Somebody knows something, so they bought it, made a big purchase, and it'll ideally revisit that in the pre-market or market open. Same thing here after hours, 3880. If USAR runs tomorrow, it'll probably get to 3880 or better. All right. We've already revisited the Friday's high in overnight market. So if this keeps its bullish momentum, right, you could very well see it go back to 3880. So if the market opens and it's not there already and it's at 3790 or around there and it's running, you can cowboy that, take that momentum, and probably see that 3880 get tapped. And I hope you understand what I'm saying. Now, somebody answer this if they need to. Do you know what I mean when I say ride that wave? I'm assuming y'all have no issues with that terminology. So basically, see that candle start to go at market open and is running, you can hop in and look at that 38.80. That's what I mean. But that's a cowboy play. You had nothing telling you to get in except for the fact that you saw that spike after hours, 38.80, and you see the big green candle running above, 37 plus. You can ride that and look for that 38.80, but that's where you either want to get out or set your stop or raise your stop loss to. But yeah, so watch USAR and MP on continued rare earth metal talks. Next one, sound. Let's go over sound real quick. Sound's been moving, right? Sound has been moving, and it hit $20.08. I want to explain something to you. Sound is basically your SoFi. Okay, Sound is your SoFi. Sound is that company that was using AI voice tech, right? Before a lot of other people were even implementing it like that. They were testing it, getting partnerships, utilizing it. Sound is that basically when you speak into those drive-throughs and AI voice speaks back, or those adverts before you get to speak in those drive-throughs, or if you're in your BMW, right, and you go, hey, BMW, take me to this place. And then that AI says, okay, taking you to that sound. Okay. Sound is that AI voice tech. Sound is that AI sound prompts, those sound prompts where you ask for something to your vehicle, your house, your machine, whatever it is, and it does what you asked and it recognizes it or it responds. That is sound. And I need you to understand, along with this autonomous vehicle stuff, this hands-free technology, sound is in there. Sound is part of that trifecta. So sound is your SoFi. Remember, SoFi was that new fintech on the block, doing all these innovative things with loans, mortgages, banking, and all that stuff, and the revolution of where banking is eventually going to go, right? That is sound. What does SoFi do? It dropped back down, played with you for a little bit, came back up, right? And then from there, it held levels and started moving. It even came down some more, threw you off, and started running on you again. Okay, sound is SoFi. I need you to understand that. So you see that $20 mark. Once we retest that $20 mark and we hold above it, sound is going back to $24, $24.98. Not only is sound going to $24.98, sound is going to $30. You see what I'm saying? It's not all about if when it comes to sound. It's about when, okay? Let's go to the past, right? Let's take a trip to the past. Boom, you had your spike right here showing you where sound can go, $10. Came back down and consolidated on that 200 EMA, stayed above it, right? And I've had one-on-ones with a lot of you and taught you guys about accumulation, right? This is an accumulation zone where it's not breaking below specific levels of support, i.e. the 200 EMA in this case, right? But it keeps trying to break above, right? Keeps trying to break to highs. It just stays within a range. Boom. And then right here, 200 EMA is ideally that accumulation zone. But I'll draw a line where they touch twice. Right there. All right, it was accumulating here. Once you get that breakout, right, that means you're beating this level and you're beating this highest level of accumulation, right, before it came back down. You're ideally looking at that move higher, okay? And without technical knowledge and not, speaking too technically, right, once you got that move and it broke above that previous high, sound went from 1023 to 2498. So understand, right? The past isn't perfect. The past doesn't repeat perfectly, but it definitely rhymes. In this case, right? Boom. Right here. Came down, came up, rejected. Accumulated above the 200, right? Above the 200. Hit it again, rejected. Hit it again, rejected. 200. So if you look at least here, right? all this matters, but looking here, you can start to see this trend start to change, right? Because we have this come down, we have this fall. Alongside that fall, right? These were our levels right here. Hold on. These were our levels right here, right? It fell, tried to get above but couldn't, fell lower, tried to get above but couldn't, but it held and took off. Once you've broken out of there, right, you slightly started a different direction. You slightly changed structure. All right, so you broke these highs, came back down, didn't revisit the lows. Okay, not only that, we trade a pattern called an inverse head and shoulders. You see this shoulder right here, you see the head right here, and you see the shoulder right here. From here, you should expect it to try to make moves higher. All right, but again, once you get above these levels, you've already attempted to break that downward move. You've broken the bearish structure. And now, after this higher high, it made a higher low. Right? After this higher high, it made a higher low. Lower high, but this low right here wasn't that low. It's riding the 200 now. This is where the 200 comes into play, why I use my EMAs. Everybody has different indicators, but my 200 EMA I use. As long as we're staying above this 200, we're bullish. And that's on the daily. But now we come here, right? 200 tap once, came down, 200 tap twice, tried to break out, 200 tap a third time. It tapped the 200 a third time. That lets me know that 200 EMA is a strong support level. I can also buy more here if I need to whenever it comes down to the 200 EMA. Until eventually we broke to the upside, retested, right? We didn't revisit that bottom support and started curling back up. All right. And this time it stayed above that level. This is why the play is not always instant gratification, right? It's not always instant gratification. This play took a minute to play out, right? If you played this breakout right here, $13 to 17 is a solid day trade. Always teach you take some, pay yourself. Boom, comes back down, right? But it doesn't come to the 200. Now it's the next level up, the 50 EMA. All right, it's holding that 50 EMA. And I teach y'all about the 50 EMA. These are all mental levels, right? These aren't just levels. These are mental levels. 80% of traders know the 50 EMA. 80% of traders are looking at that 50 EMA. And if that holds at the 50 EMA, they're going to either buy more or buy some because they're expecting that 50 EMA bounce. You can Google it. It's a thing. All right, boom, 50 EMA bounce comes up. It actually holds above that level this time. It does not break below it. This is a breakout you can buy for sure because it broke out, retested, and kept holding and took you up higher. Stocks don't always go up higher, came back down, now it's taking you higher again. All right, these levels are pretty damn close. That 1942 came down. This time it held the 10 EMA. All right, it held the 10 EMA. We always talk about respecting that 10 EMA. So strong chance sound can go higher from here. Okay. What I would be looking for is sound above, back up, at least back above the open of Friday's candle, right? How bad I gotta maneuver the screen. Come to the 30. So sound opened up here. It opened right here. So if sound can get back to that 1891 level, right? 1891 could take us to this little pop that it had, the highest high of 1921. And then we could see it probably take us back to $20. All right. So these are my levels. If we're day trading, right? If we're day trading and sound can get back above that 1891, right? We still got this level where it tried to, break away and run off, but then shorts came in or people buying puts a little too heavy and took us right back down. But at the same time, understand this isn't like a normal occurrence, right? This was news that came out. So when it's news and nothing about the stock itself, you can't blame the stock for that downward move. So as far as we know, once this news settles, the stock is back to business, right? We were looking for this stock to get right back above this line right here. So as far as that goes, we're going to look for a modest 19, what is this high? 1921, okay? So I would enter sound above what was it? 1891. Above 1891, I'm looking for that 1921. Above that 1921, we have a couple other levels. I do it like this because again, sound doesn't always make these big moves, right? Sound's been popping lately. It doesn't always make these big moves though. 1949. And then from there, I'm gonna look for $20. Because if it gets that high off of going as low as it did, we might as well go ahead and take out that 2008. All right, that's how I'm gonna play that one. But overall, right, if you could buy sound lower and it happens to drop, be blessed because sound is SoFi. That's all I'm gonna tell you. But again, if you do want to day trade something like sound, but the 1891, right, we're looking for 1921. Above that 1921, we're looking for 1948. Above that 1948, let's just take out the high of 2008, the recent super high of 2008. Okay. Above 2008, we start making our way to that $24 mark. That sound. Let me run through this. Battery's at 10%. Lift. All right, lift. All right, let's take a look at lift on the daily. Remember how I say talk about gaps, right? We talk about gaps. Where you at? Come on. Give me a second. I gotta find it. All right, so I'm gonna do it to you like this. So basically, it took off, right? Lyft had taken off, got all the way up to this 23.50. Now remember, I'm not crazy. It got up to like $26 pre-market, but we won't get into that. But remember how I say gaps fill to the upside? They also, when they're close enough, they can fill to the downside, right? And that gap to the downside was like 1850. So, excuse me, that downside gap is actually out of the way. Right now, it doesn't mean Lyft can't go any further, but that immediate threat of a downside gap was taken out. So now it's respecting the 10 EMA. As long as Lyft remains above 1896, right, and you're not in Lyft for that run to $27 to $30, right, that it's ideally going to do because it still has a gap to fill, right? Because remember, we still have a gap to fill on the way up. Right here, between this right here, we have, and I wish I had my trading view because it was mapped out, but we have a gap to fill, right? Ideally to that $30 mark. So if you look on, what are they showing? These are my Hakanashi candles. But yeah, the gap is like $30, right? And we're in it, but we're playing with it. But once we get back above that $23 range, 23.50, it's probably gonna start taking that gap out, get to 26 again, 27 and 30. So I would actually start my purchase above 1892 and just kind of be happy with that. If you buy it at 1960, $20, that's fine. Just understand your stop loss is somewhere below $18, right? Ideally coming back into this line right here that it broke out of. So 1790, I'd say $15. But again, I don't see that, but it can happen. But you're not wrong for starting a small purchase on some cheap spy plays, or not spy, lift plays. All right, because we still have this gap that's going to get filled. Might take a little while, right? But I wouldn't mind starting an entry, right, where it dropped but still managed to respect this 10 EMA. That being said, anywhere above 1896, right, and below that 23 point isn't a bad area to make a small buy for the long term. I don't really care to day trade Lyft, to be honest. Again, I'm just buying, which I already bought, right, down in the teens for that run to 23.50. But again, we still got 27 and $30 to hit. So I wouldn't mind making a small purchase. And if it drops any lower, buy more. Okay. If you start seeing Lyft get bullish, right, and show strength, you can buy more there as well. Just raise your stop loss so you don't lose. But again, Lyft is going to $27-30 because of that gap, solely because of that gap and its use case. All right, its use case. So like Uber is solid. Uber's a good company, right? But again, Lyft to Uber is AMD to Nvidia. All right. At the same time, Lyft is actually going to get utilized in all those other autonomous vehicle ventures. So yeah, that's just one of those plays I'm telling you to scoop some Lyft, right? Scoop some and just hold on to that bad boy for that ride to $27-30. Might take a while, but scoop some. All right, one I haven't talked about with you guys, right? That I've been in, but I haven't talked about it. But Grab, Grab is another one, right? Grab is another one, and this accumulation zone right here. All right, our first level has already been broken, right? I believe once we get above $7, basically. Let me see what's this. Basically, once we're above $7, we're off to the races, making our way to the $10. Seven's going to 9 to 10 to 12 and so on, right? But what Grab is Uber, Lyft, Uber Eats, DoorDash, Grubhub, all in one. It's all of those in one. All right, and it's utilized in the Asian countries, I think East Asian or something like that. But yeah, it's an app and a company that basically everything we have to get from either Uber Eats, DoorDash, Lyft, Grubhub, and all, it has it on one platform. One company provides all of that. I'm shocked it's as low as it is, but at the same time, I think it's only in 8 major Asian locations. So once they start, expanding a little bit more and maybe better financials, which aren't bad right now, actually, but better, right? And really getting out there, I think they can explode, right? I think they can explode. But think about it. Uber's over $100. Lyft is moving. We use DoorDash, Grubhub, Uber Eats all day, every day. All right. Now we all know the Asian countries aren't that lazy, right? But the ones that are prone to high tourism, right, definitely have a higher use for Grab. Okay, so as long as tourism is strong in those companies, right, and they expand a little bit more, I can see Grab going to $7, $8, and so on. But this is a very cheap stock, and the movement is measurable, right? That's the key to safety, right? To protecting your assets. Measurable movement. The moves aren't ever that crazy. If you look, the moves aren't really that crazy. It's a few pennies at a time, right? One of the biggest moves was 530 to 613. That was considered a huge move compared to how this actually moves. So I think this is picking up traction, and only in the last few days has the weekly candles, well, not last few days, last probably month and a half, has the weekly candles made it above the 200. Daily, right? On the daily, it's been trying, right? Pounding away, knocked all the way down. That was April, right? Came right back. Because remember, it was strong, started falling. April came, brought it down, and it rallied all the way back and broke out, right? It broke out. This is a double top, and that is bearish, not bullish. Understand that part. This is a double top. That means the stock was bound to come down. Okay, hit it once, reject it, tried it again, reject it. We're looking at a possible drop to